Now we're going back up to the bread and butter of the expense cycle, which is in essence a check form. And the reason I say it's a check form is because that's the form that should kind of come to mind typically when we have a decrease to the checking account. Now I realize that these days we don't often write physical checks, although you'll have some businesses that still really insist about doing that because you have owners that feel comfortable with paper checks still. But more and more, we have online electric transfers. But we can still kind of think of it as a type of check form if the check form is the form that's going to be decreasing the checking account as it is with our data input forms. So in other words, when we think about a check type form, we can think again of the normal parlance, which would be an actual physical paper check that we imagine giving to somebody. But when we do the data input into QuickBooks, we're thinking about the data input form that is used in order to create the transaction that's going to impact the financial statements, the check form being the one that's going to decrease, in essence, the checking account. So that said, we've seen that there's multiple types of check forms that are trying to give us more information. There are pros and cons to QuickBooks using these different types of checks forms. The plus is that just by the form used, I get more information about the transaction. The minus is that now I have all these different forms that are really just all decreases to the checking account, which I could have done with just one form, simplifying the process. So in other words, we've got a check form, which is basically the same thing with a check number. We have an expense form, which is in essence a check form that doesn't have the check number. We've looked at the bill pays form, which is a check form that specifically pays down the accounts payable. And we also looked at the idea that we had the payment of the sales tax using a widget, which will also be a check form typically, that will be a special one paying down the tax. So let me show you what I mean. If I go over to the balance sheet over here and we go into the checking account for 2024, drilling down on that data to get us to, in essence, the general ledger GL, which they call the transaction report. It gives us our nice transaction types over here. Remember that the checking account is where you're going to have more types of transactions than any other account. So in other words, the checking account is the lifeblood of the company. Therefore, it's integrated in all the other cycles, whereas all the other cycles are specialized in one particular area. Therefore, you can have much fewer types of transactions that are going to happen. So notice when you're in the checking account, you would think that you can break down the increases and decreases to the checking account just like the bank does, with basically just increases being deposit forms, decreases being check forms. And that's basically what we have here. We've got the deposits increasing, but then on the decreases, we've got this one is decreasing. That's called a bill payment form, but it's basically a check type form, as you can see in the description. And that will tell us that it's paying down accounts payable. You can see the other side here going to accounts payable, right? And then you've got the payment. You've got an expense form, which is like a check form, but doesn't have a check number. That's possibly the most common one for many modern businesses, not any longer using a checkbook. You have an actual check, which is the same type of form, decrease in the checking account, but it has a check number in it. You've got the sales tax payment, which again is a type of check form in essence, decreasing the checking account, but it's for paying off the sales tax, and so on and so forth. So that means that when you want to sort by this data, which is often, something that you might do, you might filter by that information, for example. And the common way to filter is by type. So here it is by transaction type. So we can filter by transaction type, and then look for it is equal to, and then I would have to select multiple of these items instead of just one if I want to see the decreases, right? Here's the check form. Here's the credit card bill payment, the expenses, and so on and so forth. So I have to. That's the problem with it. If I want to just filter all this to the decreases, I have to pick all the different kinds of check forms, which is kind of a pain. But on the plus side, if I just look at the actual form, I can basically know what the transaction is doing. So I'm going to say save and exit without saving. Boom. All right, let's go back to the first tab. Let's hit the plus button again. So let's look at the difference between an expense form and a check form. Now, the check form is now the easiest thing. And this is what, if you're trying to automate your accounting system, what you would like to get your client to be using, electronic transfers, because then we can automate the system with check forms and get a lot more information and use the bank feeds optimally. If they're still writing physical checks, which again, a lot of older types of businesses are comfortable with, that works for them. They feel like it's the securest way. They have a paper trail. They have a physical thing. So it's going to be difficult sometimes to try to get some people to go into electronic transfers, and maybe you can have a specialty in that area where you still deal with physical checks. The problem with physical checks, however, is that we can't wait till it clears the bank to record the transaction. We're forced to really do a full service accounting system because we want to be tracking the outstanding checks. So when we actually physically write the check, whether we write them by hand or print them out of the QuickBooks file, I want to create the check form when we write the check so that I can track if and when it cleared the bank. Whereas the expense forms are going to be for the electronic transfers, which I can enter at the point in time I actually pay for something. However, it's a lot easier and I have more assurance by just waiting till it clears the bank. Not more assurance, but more assurance than with a check form, because the time frame of when I write an electronic transfer and it clears the bank is only going to be 1 to 3 days. Whereas if I write a physical check, the turnaround is going to be, could be weeks to months before the check actually clears the bank. So that means that this expense form, electronic transfers, gives me the information in order to automate the process with bank feeds, which is going to be the fastest way to save time for most small businesses. So a quick recap.